Down on the day after making equity peaks yesterday, giving back yesterday's gains, kind of the ebb and flow of trading, and we see the last 3 Fridays we have been down, and so Friday has gone from one of our best trading days of the week to the last few weeks it's been one of our worst trading days of the week, and minus 43, 42.50 or minus 4,500 in live trading and minus 850 in live trading on the 50K and 250K portfolios. Let's look at the portfolio calculator. So gains to equity peaks yesterday, and we started this current portfolio on the 15th. And so you can see sometimes when you hit an equity peak, you get a continuous run up. Let's see, there was an equity peak on, let's see, at the end of January. You had this equity peak on January the 31st, and then you had, multiple days in a row, continuous equity peaks. On the current portfolio, we were trading a different portfolio than this, but sometimes you get continuous equity peaks. Sometimes you get an equity peak and then a drawdown, another equity peak and then a drawdown, and then sometimes you get a run up. There's not an easy way to predict it, but this is the latest portfolio calculator update. And so one of the things I want to talk about is Fridays and mean reversion of patterns and biases. And so a lot of traders like to bias it to the day of the week or the hour of the day or long versus short or trend versus counter trend. And if you do that, oftentimes, for example, if you're trading, say for example, if you're trading 10 strategies that are trend strategies and 10 strategies that are counter trend strategies, and you have 20 strategies total split down the middle, and you all of a sudden say, well, I'm going to stop a strategy if it goes through a specific drawdown for that strategy. If you just manage each strategy individually in this combined portfolio, and then the market gets very trendy, so your counter trend strategies all go through a losing streak, and then they get shut off. So your counter trend strategies go through a losing streak while your trend strategies go through a winning streak. And so then you shut off your counter trend strategies because they lost a certain amount for the month. And then as soon as you do that, the market goes into counter trend mode, and all you have are trend strategies trading. So then your trend strategies trade in a counter trend market while all your counter trend strategies are turned off. And so same thing here. If you just trade on Fridays or the day of the week that works or the hour of the day that works, say the first half of the day, and then all of a sudden the first half of the day is terrible and the second half of the day is the winner. And so these things mean revert and go in cycles, and it's hard to predict. And so you have to stay with different types of strategies and different type of market conditions in order to diversify your approach completely without bias. You don't want to bias it too much on those cycles. And so that's what we're doing here. And we traded Friday, and we only have 5 trading days left in the month. There is another bias that the end of the month has been strong in the past year. The end of the month has been has had more strength, and so last month it did not. But let me look back. So last month it was not a cycle of strength at the end of the month, but prior to last month we typically have a strong cycle at the end of the month. And so let's go over the market and the trades on the day. Unnatural propping here in the market. This just looks unnatural. I mean, we talk about the market getting propped up all the time, and it sounds like you think someone's in here propping the market up, but it's just such an unnatural looking pattern. It's hard to think that this is a legitimate free and fair market trading right here. The market sells off. This is Fed day. We skipped Fed day, which would have been a loser. Had this downtrend, and the market, they jumped on it, hit this wall of support, rallied, hit the wall of support, rallied, hit the wall of support, rallied, hit the wall of support, and then rallied, slowly drifted higher today. And just this wall of support right here just looks really unnatural. And let's look at the Fed's balance sheet. And you see the Fed's balance sheet, always a big topic of discussion. It went up. It was less than 1 billion. These are in the millions, so these are 4 million millions right here. And so it was less than 1 million millions or less than 1 billion before the 2008 financial crisis, and then it's gone up and accelerated higher during the pandemic. The Fed said they're going to reduce their balance sheet. So in April of last year, it was at its peak at 8.965 billion, and then we're going to reduce our balance sheet. They got down to 8.342 billion, and so about 620 billion, and then it's popped up here 400 billion. So it's about 230 billion from all-time highs, and that typically biases the market to the upside. And so it will until it doesn't. So there's other things. Interest rates are higher now, and so there's other factors. You can't just continuously increase the balance sheet, and it will always have the same effect. There's a point where it will affect the market to continue to do so. So it just creates an unnatural propping in the market. If you look at the daily chart of the Nasdaq, we had the banking crisis right here. It doesn't look like a big deal on a daily chart really, but they came in and gave the added propping power to the market, propped it up here. Market doesn't want to go below those October lows. The bulls don't want that, but I'm a free market trader and I believe in letting it do what it's going to do. And so I like two-sided price action, and I like it to go up naturally and down naturally instead of the propping mechanism that we seem to have in the market. And so sometimes that makes it more difficult to trade on the short side. So that's the long explanation of what I'm seeing and why it's more difficult to short the market right now. So not a lot of trades on the day. Viper got short, stopped out, had an order reject, manually re-entered, and then hit the profit target. Then the third trade was a loser, so down on the day. On Viper, tick pullback. Had a nice trade into the close, hoping to get a little bit more price action to the upside. We see sometimes when we do see the propping in the market, we see this pattern like this, where it starts like this, and then it gets here and it accelerates, and didn't get that acceleration today. And so EVP1 tried to jump in too. We could have had a little acceleration at the end of the day. Would have been able to get back at least half the losses on the day. So no follow through on the downside or the upside, just a choppy day. And AT 2020 these two have performed poorly on the year. The beginning of day trend strategies, especially on the short side, wasn't able to get anywhere on that short, so down minus 725 on the day, but not a lot of trades. You had 1, 2, 3, 4 strategies that traded today. Actually, let's see, 4 strategies that traded today. 2 were winners, 2 were losers in the Nasdaq. Let's look at the S&P. And on the S&P, we had Mirror, lost at the open, and got in here, got long, got stopped out, and then the market rallied. So Mirror's been one of our top performers. Opening chop, it looks like would have liked to have had a wider ranging chop, and so we just got a little bit of a long trade right here on this, plus 275. And this tick chop lost on the day, stopped out near the lows, minus 825. It's always discouraging to get stopped out near the lows and then the market rallies the rest of the day. And so, some days everything's against you. And so tick count trend turnaround dynamic, got long here, market came down here, we got out, and then boom, it rallied as soon as we got out. And so some days the market just trades against everything you do. And today was one of those days, but fortunately we didn't take many trades. There were 4 S&P strategies that traded. 3 strategies were losers. 1 was a winner, and so net around break even since Tuesday. So we had a around break even on Tuesday. Wednesday, Fed we didn't trade. We were at equity peaks intraday right here, and we were end of day equity peaks here. But since this equity peak right here on the intraday basis, the market's been it's been more challenging since yesterday at around 11. And so even though we were at equity peaks at the close, our intraday equity peaks were right here, and then it's been a A challenging tape to trade since 11 a.m. yesterday. So looking forward to next week, the last trading week for the month of March and for the first quarter of 2000. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.